Oliver, shares in Ladbrokes, the publicly traded UK bookmaker, are up a sporting 16% today on news that they might be merging with their rival Coral. This seems like a big pop, given that we don't even know the terms of the deal, if there is even going to be one.
You're right. It's a very big jump on the hope that there'll be a deal. Ladbrokes has said there are talks, so I guess there's strong hopes that it would happen. There are a lot of reasons why you might be quite hopeful. Ladbrokes has not been a good performer. The shares are down quite sharply over the past year or so. You compare that to rivals like William Hill and Paddy Power, their shares are both up in the same period. And that's because of a worsening trading performance at Ladbrokes. Now, what would a merger do to solve all that? Well, for a start, there'd be cost savings, as there often are. You can make more of your marketing spend, and also they'd be able to bulk up online. Combined, the two companies have just under half of the physical high street bookmakers market, but a much smaller share of the online gambling market. That's just in the sort of mid-teens. So they could really increase their scale there.
Now, Coral is not a publicly traded company. Who owns it?
So Coral is owned by a collection of hedge funds and private equity funds, and there'd been rumours that they would want to IPO the business at some point in the near future anyway. So this would achieve their aim via an already listed vehicle. What it means for Ladbrokes shareholders is that they get to do this deal, but they also get a lot of hedge funds and private equity firms on their share register. They may not be too pleased about that. If nothing else, these shareholders will probably not want to stick around, so there will be some pressure on the share price as they sell down over the medium term.
I suppose the other natural question, given, as you say, they'll have close to half the high street bookmaking market, are regulators going to let this deal through?
It's a very interesting question. Before 2000, they tried to do this deal, but the Labour government in the UK blocked it. So perhaps it'll be different this time around. Certainly the market has changed. The online market has grown an awful lot. It's not quite so concentrated on the high street bookmakers anymore. So there's a chance the regulators will look differently. They might demand some divestments from the combined company. Not necessarily a bad thing when you think that the high street market is only growing at about 1% a year. It's not a very exciting market to be in. On the other hand, it's a question of who exactly would want to buy high street bookmaker shops.
Does Lex like the deal or not, Oliver?
Lex likes the deal.
Thanks.